Winston and Felix here, not in that order of importance, of course. Apple stock down 2% today. What does it mean? Is it the end of big tech? Is it the end of the tech rally? Well, Winston has told me that it is not quite the case. What's going on here is that PC sales, computer sales, have fallen across the industry about 25%. Everybody, Dell, HP, everybody. But Apple is down 40%. And the explanation for the 25% down is fairly simple. Everybody bought new computers during COVID, and now everybody's got new computers, they don't need to buy any anymore. It's as simple as that. But what it also means is that Apple, because it's a much more expensive product, is falling more. So is the power of the Apple mode waning a little bit? And are people a bit more careful with their expenses as we're heading into, in my view at least, recession? We're seeing higher credit card balances, people paying their debt off later, all that kind of stuff. So as that's happening, people are starting to get a little worried about tech, and big tech stocks, the S&P 500 tech stocks, like Apple, the biggest one, are trading at a higher valuation compared to the S&P than in 2000. And I remember 2000, I worked in a .com company in 2000. I remember literally the lights being switched off. We went from burn as much cash as you can to no more money. And now, am I going to short tech stocks at this point? No. Why not? I've tried that and it didn't work. It was expensive. I don't really short anyway, but I use options to do it. And by the way, guys, if you want to leave a comment down below, what do you think tech stocks are going to do? We do raffle, like Apple TVs, for example, and subscriptions to our premium newsletter, which are like $800 at felixfriends.org/trade, things like that, and we'll raffle it again on Friday. So do that. Comment down below what you think of big tech stocks. But I think big tech stocks might actually persevere for a bit. I think there is a chance that even though a lot of hedge funds have started to short them compared to the S&P, it might go a little higher yet because it's sort of the safety trade. But earnings season is coming up. And what does that mean? Well, I think we might get disappointed with earnings. And I think we might get disappointing outlooks with earnings, at which point you might actually start to see a tech stock dip here, or a bit more than a dip. So watch out for that space. If you want to do kind of trades on that, you can. In theory, you could set up a trade, and there's no financial advice, where you put down $50 and you could make like 800. And the worst you could ever lose would be $50. That's the sort of trades you can set up on if you have a hunch like that, and keep them small and potentially make money. But generally speaking, I prefer a trade where I have a real edge and have some real insight. But I'm going to be watching this space, and we'll definitely be doing a lot of trading on tech coming up here in the next couple of weeks. At the moment, I'm still trading energy mostly. That's what I'm hoping to set up today or tomorrow. And of course, you guys in the community, you'll see that. If you want to see my live trades and you want to see what I'm doing, then sign up for our coaching program at felixfriends.org/coaching. In fact, just book a call with us on that website. There's a call link, and you can just have a chat with us about where you are at and what you're looking for, and if what we do, learning from a group of former investment bankers, might be what gets you to your goals and your targets. And that's me, really. I just want to say, wish you a beautiful day from beautiful Monaco here. The Grand Prix is on here. No, not the Grand Prix. The tennis is on, and then the Grand Prix coming up. So the town's getting really nice and busy. And appreciate you watching. Appreciate you tuning in. Put a comment down below. The first 30 minutes, anyone who comments, you can win some really great stuff. See you on the next one.